Ex-Astro Malaysia Holdings Group CEO Datuk Rohana Rozhan has confirmed meeting with anti-graft officers following the revelations made by ex-Goldman Sachs banker Tim Leissner. Rohana said in a brief statement issued by her lawyers at Messrs Valen O and Partners today that she had attended the offices of the Malaysian Anti-Corruption Commission and pledged to give full cooperation to the agency in its probe. It is understood that she went to the MACC yesterday. According to a Bloomberg report, Leissner testified on Tuesday in his former colleague Roger Ng Chong Hua's trial that a media CEO with whom he had an affair had allegedly blackmailed him into buying her a $10 million home. Leissner identified the person as Rohana and said that he bought the property in London in 2013 after she threatened to expose his involvement with 1MDB. Meanwhile, in today's hearing, Leissner also testified he stole tens of millions of dollars from his accomplices in the fraud. A report by Bloomberg today said he had testified that a large portion of the $6.5 billion raised through the 1MDB bond deals he helped organize with Ng was siphoned off to pay kickbacks and bribes to officials in Malaysia and Abu Dhabi. But the $60 million in kickbacks he kept for himself wasn't enough. When Low-Tech Joe asked Leissner to hold 145 million euros in a shell company in Mauritius, Leissner reportedly saw an opportunity and decided to keep $80 million for himself. He said he then borrowed another $1.25 million from Ng, but his arrest prevented him from repaying Ng any of the money. Ng, a Malaysian, is the only former Goldman Sachs banker to be charged in relation to 1MDB. AMMB Holdings reported a more than 50% jump in earnings for the third quarter of FY22 to 403.3 million from 263.8 million previously, despite higher loan provision caused by exposure to the local oil and gas industry. Revenue for the quarter ticked up to 1.183 billion from 1.176 billion according to the bourse filing. A tax credit amounting to 234 million was booked in the third quarter, which helped to lift AMMB's quarterly net profit that would have been dragged down by higher net impairment charge of 337 million. AMMB's presentation notes on its results showed. According to analysts that attended the banking group's results briefing, a big portion of the loan provision was the result of lending to Serba Dynamic Holdings. Analysts were guided that the group is expecting more provisions in the following financial quarter for its exposure to another local oil and gas entity. Retail banking loans remain the main driver of the group, with AMMB's retail loan portfolio increased by 2.7 billion, primarily contributed by mortgage loans as well as personal financing, offset by a reduction in auto finance. Group CEO Datuk Sulaiman Muhammad Tahir says AMMB continues to be proactive and prudent in managing risks with preemptive provisions against certain loan portfolios. Total overlay reserves were retained at 945 million compared with 900 million last quarter. He highlights the group's annualized return on equity at 9.2%, an improvement from 6% a year ago. Sulaiman says that with the nation's economic recovery gradually on track, supported by the national vaccination program and the government's policy measures, its prospects are expected to improve further once the country's borders are reopened. He also emphasized the bank's ESG journey, saying that it was imperative for the banking sector to hone in on the need to address global sustainability challenges. Telecom Malaysia's net profit for the fourth quarter plunged 69.2% to 79.9 million from 259.4 million due to a mixture of impairments, depreciation and provisions. TM attributed the profit drop to a 122 million impairment of the group's mobile assets, the accelerated depreciation that the group commenced in the current quarter, as well as provisions recognised for restoration of services and network affected by floods at the end of 2021. These were in addition to a 37.9 million lower forex translation gains on borrowings and the application of the 33% Cukai Makmur tax rate in the group's deferred tax liabilities. However, quarterly revenue was up 5.1% year-on-year to 3.15 billion, with strong increase in revenue from internet and data, according to TM. For FY21, the telco's net profit slipped nearly 12% to 895.2 million, although revenue in contrast grew 6.35% to 11.1 11.53 billion from 10.84 billion ringgit. TM also declared an interim single-tier dividend of 6 cents per share, which brings FY21's total dividend to 13 cents per share, which is lower than the 14.3 cents per share that it declared in FY20. Group CEO Imri Mokhtar says the telco's growth revenue is expected to remain intact, in line with its market guidance, which is between low and middle single-digit growth. He explains that TM is expecting to invest between 14 and 18% of its revenue this year on capital expenditure, which reflects its continued commitment to reinvesting in growth areas of the business. On prospects, TM says 5G presents new opportunities for the group to offer compelling converged services in enriched content and cloud-based smart services for Unify and TM1 customers. Public Bank saw a 20% increase in net profit for its fourth quarter to 1.38 billion, mainly due to lower loan impairment allowance and higher net interest income reported during the quarter. This was offset somewhat by lower investment and other income. However, revenue dipped marginally to 4.86 billion from 4.92 billion ringgit. Public Bank declared a second interim dividend of 7.7 cents per share, which brings the dividend for FY21 to 15.2 cents per share, representing a total payout of 2.95 billion for the entire year. The better fourth quarter lifted the group's net profit for FY21 by 16% to 5.66 billion, despite top line declining by 3.4% to 19.62 billion ringgit. Public Bank attributed the improved profit growth in FY21 to the low base effect in the prior year, when the COVID-19 pandemic led to the closure of most economic activities. Founder, Chairman Emeritus, Director and Advisor Tan Sri Dr. Teh Hong Piao said that the banking group managed to steer through the challenges of 2021 with sustained balance sheet strength. He says that as the economy gradually recovers, the group will continue to focus on further strengthening its business resilience, including preserving asset quality, maintaining cost discipline, and upholding high standards of corporate governance. Sime Darby Properties says it does not rule out the possibility of establishing a real estate investment trust or REIT down the road as part of the group's transformation journey from a pure-play property developer into a real estate company. This is after, among others, the creation of an industrial development fund, which will be part of the investment and asset manager business under Sime Darby Props' Shift 25 business model. Group MD Datuk Azmi Marikan says that while it is still early days, the idea is that the group needs the income diversification to earn money as an asset manager, but to also look at the property or real estate sector and be an investor and take advantage of assets and to have long-term recurring income. To recap, Sime Darby Props unit had formed a joint venture with a subsidiary of Logos Property Group under an IDF collaboration that aims to initially raise $200 million in seed money from accredited and institutional investors to finance the planned development of industrial property in Klang, Selangor. Sime Darby Prop says the IDF partnership is set to make its maiden contribution in the second half of FY22. On the outlook for the local property market in 2022, especially in light of the discontinuation of the home ownership campaign, Asmir says he is overall positive for the year and believes the group is going to have a good FY22. He cites Sime Darby Prop's 2.6 billion sales target and 2.8 billion GDV of launches as positive indicators.